We have another budget, which is out of that regular we will be creating, and is the capital budget. We call it CapEx. So anytime you will hear anything about the CapEx, it means capital expenditure. And it means this is the money we need. So we need to make them first, then to save them, and then to spend them on acquiring, upgrading them, or maintaining your physical asset like building, equipment, and property. And capital expenditure is not what you, when I say from the accounting perspective, whatever you spend and you don't really have to depreciate, or there is no amortization required, and this is something what your accountant will understand. What does it mean? It belongs to the operational expenses, so-called OPEX, operational expenses. Whatever you need to depreciate or do the amortization, so you put the cost of, let's say, buying a new car because you're going to be doing airport shuttle, okay, for your clients. You cannot simply take the value of 100,000 euro bus and just put it into your operational expenses. You have to simply divide this expense 100,000 euro into a small pieces. For example, in Germany, we have it for 6 years. In Czech Republic, we are doing the depreciation or amortization by 5 years. In your country, you have different legislation requirements for this. And it means if you're going to spend 100,000 euro on your shuttle bus, if it comes to the Czech Republic, for example, you have it 5 years. So you're going to take 1/5 of the cost, and you will only, put it into your expenses, into your costs, only 1/5 of that value you have been spending. So capital budget has a huge influence on your cash flow, because you have to take your 100,000 euro cash and you need to put it somewhere, and you don't have it, but you can put it into your costs, accounting costs based on what you're going to pay your taxes, only 1/5 of that, in case your amortization is supposed to be for a car, for example, for 5 years. So then you need to plan for this, your cash flow. As I mentioned, you have to make the money, you have to save the money, you can spend the money. If you don't have it, then you have to borrow the money. If you have to borrow the money, you need to see if it's, how it's going to influence your operational cost, because your interest rate is going to fall into the operational budget.